Welcome everybody to the next episode, and it's still not been released yet, to the Amazon Nomads. I'm here with Seth and Thomas. This
Bonjour.
topic is about Q4, right?
See,
Prepping for Q4 because it's currently the 11th of October 2022. Hopefully, this will come out by the end of October, so we'll still be able to get plenty of good info out for the newbies and the veterans alike. My Q4 prep is totally different to you two, so I think we should start with you two because mine's less interesting, I think, and less money is going to be made. So I don't know if you want to start, Gav, and then we'll go Tom and then me.
Okay, so I'm looking at additional credit cards. I'm actually looking at a Payoneer loan. I don't think I can get an Amazon loan because I don't have USA personal credit history. So for USA, an Amazon loan is quite challenging. Although
Can
Payoneer
we
seem
dig into
quite
that a tiny
happy.
bit, actually? Can we dig into that just a tiny bit? Because Tom told me this, because I was wondering about opening up, getting an Amex card, business card, and Tom was saying because of credit, like it's difficult to, when you've got no credit history, it's difficult to get one and you have to have a personal card. So is that the case with all business cards, or is that just Amex? Or
I think that's going to be the case with all. Not financial advice. I have no idea what I'm saying really, but I
but from
do
your
I do
experience,
know
what you've tried?
it. Yeah, it makes sense. Although I believe one of my mates has got a what's it, Tri-Jeeves? They've got like a Tri-Jeeves card, so that could work. So there is opportunities there. I
Isn't that
think the
dodgy though, the Tri-G's
difficulties.
one?
It seems a bit dodgy, mate. To be honest, I don't know. It needs more time. Once it's got more time in the market, then I'll make a decision on that.
What is a Tri-G's for people who don't know? Because I didn't know about this until you mentioned it.
It's a charge card that's brand new, but it is supported by Y Combinator. So the only reason I'm saying it's dodgy in my head is because it's so new. It's like brand new to the game. So
Yeah,
I
Y
don't think they
Combinator's
have any
quite legit,
credit.
isn't it? Like
Yeah,
that, the guy that runs that has been on Tim Ferriss a few times, and he seems to be very switched on. So you'd be surprised if he was hawking some sort of product that's like fraudulent. But who am
but
I
it's,
to
it's
know?
back. It's backed lots of crypto though. So I mean,
Oh,
I'm
okay.
sure. I'm sure it's backed crypto. Y
Yeah, that
Combinator
sounds.
crypto.
Yeah, what's his name? Is he the guy that he's the guy that started WordPress, right? I think
I have no idea.
possibly. So he's obviously probably a billionaire because what, like 80% of websites run on WordPress on the internet, something like that, something crazy.
Yeah, that
I
is
think
pretty
I think
nuts.
he's the Y Combinator guy. But
So anyway, though, so that's the main plan. I'm also planning to liquidate because obviously being new to the market, we've done so many bad buys that Q4 we're going to liquidate and then reevaluate our strategy. I've also offered my main sourcing manager 10% net profit of the company if he can get over a certain amount.
so how do you calculate liquidations? Like what? Yeah, what's your thought process with it?
I'm doing it by inventory age. Anything longer than 3 months is stock that I want to liquidate. But I'm going to be
Okay.
doing that over Q4. I'm also going to be going through every single listing. Anything that I feel like is not a great buy, I'm going to liquidate it because I feel like it would take a lot longer than 3 months if I don't get rid of it during Q4. So
That
it's
makes
going to be a
sense.
it's,
Oh,
it's going to be a full listing analysis, and then we're just going to change our criteria so we only focus on much faster selling items, and then focus a lot more heavily on replenishment. Because we went so wide, we have like 700 plus ASINs active, so we have a huge amount. But now that we have a lot of that data, we want to
why is your
refine
face
that.
like that, Tom?
Yeah, Tom.
For people listening, Tom's
700,
got
that's how much I have in the UK, and I do like 250,000 a month. Wow, that's a lot.
Yeah,
are you just going
but
super
that.
wide and not deep, right? I assume.
Yeah, exactly. Because I can't go deep until I have some return data for shoes. If I would have
Right.
went deep on some of these shoes, I would have been obliterated, man. I'm telling you.
Yeah, and
But the thing
also
is,
just
like,
going. Sorry, go on.
I could get like six ASINs could be on the same shoe though, just different
Right.
sizes.
Yeah. Okay. Lots of variations as well.
Yeah.
But I also would like to make sure we stick a pin in what you said about the bonuses because that'd be really interesting to know in a month or two's time whether that team member has significantly improved their performance based on that, right? Because obviously not everyone's
Yeah.
motivated just by money, but it will be interesting to see whether they really go for it. So
Yeah,
yeah,
I'm
make
super
sure you
curious
keep
because
us updated on that.
I've told him that we're gonna have a lot of money if I get these when I get these loans. So he can make as much money as he wants to. He's just got to put in the time.
And sorry, so these sort of loans, what sort of interest rate? What are the terms on them?
So the Pioneer loan is between 3.5 to 5% fixed rate.
And
So
how
you
long do you
borrow
have to pay it back?
6 to 9 months. So they do different contracts depending on how long you've been with them. I think the one I'll be getting is like a 6-month contract, and that's I don't know the exact percentage yet until they give me the offer. But running some quick numbers, they're likely to offer me between 20,000 and 30.
So at current inflation rates, it's pretty much free money. Not financial advice, obviously, but is that not free money? If you know that you can buy stock that you can sell within, say, 60 days at a profit, even if you were just selling it at cost, well, like cost plus costs, surely it's like free money, isn't it? Because
you'd have to make like $1,000 profit to break even, and after that, off their money is a net profit, right?
Yeah. So it sounds like a no-brainer, especially with that Mercury account that Tom showed us as well. If you can bump your account up to 50 grand, right, everything on top of that, you get what, 1.5% cash back.
I was told though you have to keep 50 grand in the account, so it kind of kills it a bit.
That's the impression I got. But obviously, if you've got 50 grand spare and then you get the extra loan on top, it sounds very useful.
But then you would just want more stock, no?
Right. Okay. Yeah. What's your thoughts on that, Tom?
Wow, lots going on. So Mercury, we put 50 grand in the bank. We applied. We waited a week and a half, and then we heard nothing back. We even said to them, "Hey, you said it was going to be 3 days," and we waited 10. Still nothing, and even to this day, they haven't come back to us. So we just made the decision that we think they're going to be so backlogged with applications, we're not even bothering. We're going to wait until Q1. Yeah, it's not going to work. Yeah, that's it. And then payability, fine. Literally just loaded it up now. But again, like all these like RSGs, as far as like Mercury, as far as I am aware, they're all secured credit cards, i.e. you deposit X amount of cash, and then they'll give you the credit against that cash, and then obviously you get cash back on it. So like whether you spend the cash itself or you use a secured credit card, the secured credit card is probably better because you get the protection and you get the cash back. So if I could, I would do the secured credit card approach. And also, it's good for your credit rating. Yeah, like right now, we're not going to do it. And I think, from our perspective...
So what is payability, by the way?
Payability is like a loan financing. So it looks at your sales.
Similar to Pioneer?
Like Pioneer. They do all the same stuff. They kind of pay in advance. Okay. They give you a loan on your sales.
Got it. Okay.
But I think, from my side, I don't know about you, but I think, like, we can probably just do, like, we've probably done, like, I'd probably be inclined, Gavin, to speak to Amex and say, can I create an Amex business card? Because I think you and me we've been over 6 months with them now.
Has it been 6 months? I think it's been almost 6 months. That is a good.
It's worth asking the question. I'd check it for 6 months, and if we're with them, then let's see if we can create a business one. Then you can get credit on the business and credit on the personal. Just make sure you keep churning the business. Don't go too crazy. Probably like 10k first month, 20k second month, 3k third month. Still an extra 20, 30k for stock.
Would be super helpful.
Could be cheeky. Do you think you could be cheeky with Payability or Pioneer, and I could show them my book sales and then actually use the loan for my new business?
No, different entity. It's like you doing a loan and giving Gavin and then Gavin taking the money. If you give him the money, that's fine. But put it this way, they'll never really know. But your problem comes is that if something goes wrong, oh my God, you are so personally liable. It's ludicrous because you've breached the covenant of the LLC.
Are we not personally liable anyway because we're using a personal credit card for USA purchases when the insurance on the USA card?
Yeah, for the USA, you're personally liable for the fact that, not legal advice. My understanding is that should the business go bankrupt and there be money on the personal credit card, then you're liable for that. There is something called piercing the corporate veil, which I'm not 100% sure about, but my understanding of it is that when you start using personal money for business purposes, it potentially pierces the corporate veil. You might say that we're okay because we only use the personal credit cards for business purposes and there is no personal transactions on them. But again, I'm not a legal advisor, don't quote me on that one. Like, you'd have to argue in a court of law. But if you were using my personal card to do lots of personal and business ones, then definitely you'd probably say you're piercing the corporate veil. And that's the protection the LLC gives you. Again, not financial advice.
Of course not. So with regards to, obviously, you've got a UK and a US business, what are the nuances or differences, if any, between your Q4 prep on UK and US?
None, really. Exactly. It's the same business model, different market. The only one is money. That's it. We've even got, I think we've got 3 prep centers for the UK set up. We've got 2 or 3 of the US set up. We've divided the teams. Each team is 4 or 5 sources with 1 purchasing manager. We've split them into teams. teams. We've put a bonus scheme. I think the winning team gets a whole month's worth of salary on top, plus they get 8% bonus shared of net profits. Yeah, like, and they've done well. Like, if I just talk about in the UK, yeah, we've been struggling. Like, we've been struggling buying for the last month. We've probably been averaging 25, 30k spend a week. Last week they did 52,000. That's the first week of the teams. So we got the money.
What's changed there? What's changed, do you think?
We just challenged them, set the system up, create competition between them. You know, it's like we've got Team Chicago Bulls, Team Nike Air Jordans, or whatever. I don't know. You know, like they're doing it. It's all Filipino stuff. I have no idea, but I'm just seeing the numbers come through, and like it's looking promising. Even in the US, we've done £20,000 worth of spend in 2 days this week.
Wow,
it's like 9,000 estimated profit in 2 days.
How many sources?
15.
Wow.
Maybe 14, 13, around that.
You literally have an army.
I do.
Thomas's army over here is the future president of the Philippines.
Infantry, cavalry, generals.
You have ops. You have me. Then you have basically my ops manager, who's new business development manager. That's his name. I just say ops. Then you have my 2 purchasing managers who run US and UK. Then you have a purchasing assistants, and then you have the sources underneath. That's my structure.
This just came into my head when I was speaking to some of my American friends last year about Q4, and they were kind of making me really jealous because they were saying how one particular product was they were buying chocolate, like confectionery, candy for all the Americans listening. There was just a box of chocolates that was say $10 to $20, something like that, and apparently they were selling them to between $100 and $150 per go, and they were buying them from one of those semi-wholesalers, so they were buying like 10s at a time and selling loads every day. And I was just thinking that's obviously really crazy. Gavin, I know you're just doing shoes because you want to focus on shoes, but would you be tempted if you saw like opportunities like that come up? I know it's not necessarily scalable, but it would give you data for next year if you wanted to.
Yeah, I'd do
scale
it.
That proposition.
But
yeah, you would.
Yeah, money's money.
But you're not going to focus on it. Yeah,
No.
yeah. You're not going to ask one of your team, can we try and find some advent calendars that are going to make us a ton of profit?
No, I'm not going to be directly asking that. If they want to do that and go out their own way, that is fine. But again, it's because I have so little knowledge of the American market compared to like how the UK is. I'm just trying to stick to one thing, make my mistakes in this one niche, then learn from it, get good, and then scale really well.
No, that's a good answer, I think. I think that's a good answer. As for myself, my Q4 is very dull because I sell books. My team and I are just wholly focused on trying to buy as many cheap textbooks as possible, because from Boxing Day right through till the first week of February, sales just go absolutely crazy. Hopefully do 200k over that month. Well, over that period. Maybe 210, 220, hopefully. But
sick.
Sales they've dropped massively since last month, and that's just the way of books. So I've been selling through we've been selling through so many textbooks over August and September. A, we've kind of sold out of a lot of the textbooks that were selling well, and B, obviously everyone's already at school, at college. The demand's not there for textbooks, so we're having to focus on other books, and obviously because we're not quite at Q4 for say like Christmas books that we buy or any sort of seasonal Christmas, maybe like cookery book, the sort of things that people want for Christmas. We're not really at that stage yet. So October and November are notoriously the worst months of the year for books, but we're not going to let that bring us down. We're just going to hope that we can capitalize on the low prices, like the high supply now, and then obviously demand will go up from Boxing Day onwards. That's pretty much us. There's not really anything else going on on that front, but hopefully if with Gav's help, and if I get my EAN come in within the next 2 weeks, I can hopefully get some shoe stock in before the Q4 rush. So when does it all start? Because I obviously just don't know. Like, does it pick up in late this month? Is it November?
I'd say mid-November it picks up, and then it explodes in December.
Yeah, I wasn't sure if it gets earlier and earlier each year, because don't they do like lots of like Prime Days, and then there's Black?
I think with the way the economies are going, it's starting slower and slower. I'd probably say the opposite there. It will take longer to make a move.
Okay. Yeah, I'd probably say, like, if you think about it from the perspective of, like, we've just come out 2 years of COVID. It seems worse, but what you got to realize, it was like, this was the normal growth trajectory, but then it's like normal growth trajectory, and then COVID turned up, and now it's finished. So we're still going up relative to what we were historically, but we just had a massive peak. That's what I thought would be on it.
Yeah.
And also, one thing I remembered is that because my stock just doesn't sell through that fast, my IPI kind of dropped, but it's very slowly going down. Mine's at, say, I think 582 at the moment. I'm sure your guys is much higher because you focus more on products that sell fast.
Mine's 530.
Oh, really?
Yeah.
Oh, wow.
I had no idea.
Your IPI is pretty good.
Yeah.
Yeah, so but my question is, are either of you getting hit by the restock limits because because I went from having been allowed 35,000 books or items, and I'm now at just under 21,000, and so we're on the cusp at the moment, and we're struggling a bit, so we're having to buy kind of slightly less books than we'd like.
You have 21,000 books?
20,500, something like that.
That's crazy. You have more books than a bookshop.
You are a proper bookstore now, aren't you?
Pretty much. It's quite cool, isn't it?
Mental.
It would be nice to have an actual bookstore, but
when's your retail shop come back?
But don't really want to do that in London because the rent costs will probably not even cover however much of.
You mean the electric bill, just for the lights?
Exactly. The electric bill, the rent, impossible.
Yeah. Are bills still going up in the UK? I'm very curious about how the UK is doing since I've left.
I'm just not paying my electricity at the moment, so it's going to be a rude
Why
awakening
not?
when we finally set it up. Well, I've been living here for 2 months. I've just been with me and my housemate have been putting it on.
Are you not supposed to do that? Like, take the what do you call it? Yeah,
reading.
My sister was screaming about it. I was like, I don't even live there.
We'll do it at some point. No rush though, is there?
Yeah, I just want to see what happens. It sounds bad, but I'm very curious what happens to the UK during the winter and Europe.
Just that it's going to be very expensive to live here, really. That's all.
Yeah, I will be in Thailand though, so I can see some nice pictures, Seth.
You've got your nice swimming pool, haven't you?
Yeah.
Wow.
Yeah, when it's like December and freezing and you're freezing your balls off, I'll be going for a swim in the back garden pool.
It's already cold here. The heating has been coming on. It's a bit brass. It's a bit brass-like, but that's part and parcel of living in London, isn't it? It's all
That's
good.
life. Go on.
So,
Talking about travel, my girlfriend was thinking about. She was like, "Oh, Tom, do you want to go away for like a bit of a break? You know, because basically I've just come back from Europe, and I'm probably not going to go away now until January. So we're like, should we go on holiday? You know, between now and then, you can get. I found this 300,000 Amex, which is 300,000 Marriott points, which is 200,000 Amex, which is £200,000 spend, which like in the grand scheme of things isn't huge. Like it is like for a lot of people, like it's about 500,000 in revenue, should we say, just less than that. So in sales, but we can get two people, 7 nights, Marriott 5-star hotel, all inclusive in Cancun. I was like, ooh, nice. On the beach, very beautiful. It's a proper autobiography hotel. I was like, oh, I'll take that. No, well, I mean, I'm an umming and ahhing. I've got to go to America at some point. I just told Seth before I came on, I called Chase up my bank, and they were like, Mr. Parkinson, thank you for depositing $10,000 into the bank account and trying to transfer it again. We just need to verify who you are. Can you please come into store? I was like, so I have to go to America.
Oh, no.
Oh, my God. So hence I have to go to America. We'll see.
Problems of being an Amazon nomad, right there. There's not that many problems with it, but when that happens,
bit of a pain. We'll figure it out. Carry on.
But I spoke to you the other day about getting a CPA accountant for the LLC, and I do remember us talking about it last year and you saying you were quite surprised at how expensive it is. I think, Gav, you might have concurred with that, or a few other people I've spoken to have said, yeah, it's much more expensive than in the UK. In the UK, I'm paying the equivalent of $200 plus VAT per month for them to do everything, and I know that Tom's paying significantly more than that. And I got a quote from a UK firm who do LLC tax returns, but they don't do bookkeeping. They gave me quite a cheap quote. So I don't know if I was only on a call with them for about 10 minutes. So I'm not sure if I just didn't explain to them everything that I needed. But I told them I was an Amazon seller. I've created an LLC. I want you to do my tax return, and I'll get my bookkeeping done somewhere else. Is there something I'm not telling them? Are they missing something? What do you guys think?
What do you want from them? If they're not doing your bookkeeping, what exactly do you want from them?
Well, they're going to file tax return, right? And then they're going to do whatever form they need to do to show that I don't want to pay tax in the UK. The double tax treaty, right? And then bookkeeping, I thought was easy. That's cheap, isn't it? I can get anyone to do that.
I have not done any form to say I'm not paying tax in the UK.
Yeah, it's like a form 8832 and a form 8833 they tell you about. They need, right? Yeah, that's all that they told me on the call. They said, we will file that for you for what?
But you should already be filing that because you have a US LLC already.
A UK.
Oh, you do it for the UK company.
Yeah, no, I'm doing that. Yeah, I'm doing that, but then I think you've got to do it the other way as well, because obviously I've got an LLC and HMRC need to know that I'm obviously going to be getting taxed in the US and the UK separately.
You won't get taxed in the US. Basically, because there's a tax, as far as I'm aware, they'll basically just say to the US government, hey, you are a UK resident, taxpayer. So they'll basically, because if you're in a C Corp, everything that comes out of the company will be paid to you, should we say. There'll be no tax liable in the US, it'll be taxed in the UK.
So you get taxed in the UK for your US business?
If I took money out, but I don't take money out, I have no need.
Oh, okay. Right. Okay. So if I just reinvest everything, I won't need to worry too much about that. And if I only take money out of my UK limited company, then I'm not going to have a lot of
So
issues.
because so basically, you're not running it through an S corp in the US, because an S corp is for US nationals only. You're not one of them, and that's basically kind of like a pass-through entity. You can do an LLC pass-through to the UK, which is what you could have done, and you could have passed it through to a UK company. Again, it gets a bit more complex, but I think, as far as I'm aware, you've created an LLC with a C corp in the US, and what it is basically it's like a limited company in the UK, not like in the US, and the money just sits there. Now, if you will be charged corporation tax on that money, any profits in the year, but if you take any money out, then, as far as I'm aware, they'll tell IRS you're a UK taxpayer, and there'll be no tax from the IRS perspective, but you will be obviously liable on the UK HMRC perspective.
Okay, I get you. So I'm going to be paying corporation tax in Delaware because that's the
You'll pay.
place for
Careful. So corporation tax is paid at the federal level.
State level,
The
right?
federal level. Delaware is at state level. They do have what's known as it's not a sales tax. They have another type of tax. It's like a gross receipts tax. It's only eligible, if I'm right, you only pay it over the first 300,000 per quarter. So if you do under 1.2 million in sales a year, you pay nothing. If you pay over that, then it's like 0.001.
Okay, so I won't have too much to worry about until I start smashing it.
Yeah, and the thing is, even with the income tax, because you've like invested it as a director's loan, you can just take that money back out when you want to, rather than paying yourself.
Yeah, you.
Say that again.
You've already like directed and loaned a whole bunch of money into the account, right? So
well, I will do once I've got everything set up.
That money then can just come back out instead of paying yourself, and then in the future, all you've got to do is just drop UK tax residency. Then you can pay a 0% tax.
Got it. Director's loan, you mean? So when I want to put money into my US bank account, which I eventually create,
it's a loan.
That's just
a loan,
just a way of
yeah,
and you can pay it back on with like 0.01% interest, right, or whatever.
Yeah, whatever your accountant says.
That's how it is, isn't it?
The other one you can do is, if you want to, is like, obviously not professional advice or whatever, speak to your accountant, is obviously if there were legitimate reasons you needed to spend quite a lot of that profits for business purposes in the US, i.e. travel to the US, Amazon related events in the US, then obviously that would be a legitimate business expense that you'd be able to take out, and that would reduce your tax liability down, or the cash available in there.
I'll come see us in Mexico.
A lot of that.
It's another prime every day. Keep the doctor away.
That's Gavin's motto.
That's happening at some point.
Tom, you're the one who always suggests this place. We've been there so many times. We've been to, how many restaurants have we been to besides Sonora
Not that many, mainly Sonora Prime.
Yeah. It is pretty good.
Makes sense, doesn't it? You're going to be disappointed otherwise.
I agree. It's very good.
Oh, it's just like, it's 10 seconds away from Tom's house.
That helps, yeah. Don't mess with a winning formula. Don't mess with that.
Reformer is fantastic. Yeah, that's cool. So I think obviously that's like money into the US LLC, what you're doing. I will just add, if anyone's like doing Q4, so I appreciate that's what they're calling it right now. Like for us, the one thing we are kind of thinking of, the one thing I always say, because some people don't really understand this, is sales don't go through the roof in Q4. They really don't start picking up until probably about mid-November, but you really need your stock in before that time, because it takes time. For us, we're probably going to be looking at stopping Christmas stock on the week beginning the 14th December. Oh no, I'm in November, sorry. Week beginning like the 12th, maybe, probably like 15th. Around about the 15th will be the last time we start shipping Christmas-related stock. We're obviously going to monitor it closer to the date to see how quick Amazon checks in. So, and then obviously the idea is that Amazon doesn't stop after Christmas, is the fact that there's still a lot of like sales to be had after Christmas. People are still buying stuff on Christmas Day. Just make sure your Christmas stock is sold before Christmas. Generally before like 22nd, 23rd. That's the last days you really want to get your products in, or out. 24th is a bit late.
In US, maybe a bit earlier, because shipping is longer. Yeah.
So I think let's do two things.
Oh, wait, also cashback. There's going to be a lot of cashback available.
Okay, so that's another good one. Let's do top tips for newbies. You guys are going to have to lead on that because I don't have a clue about OA. But another question I would like to ask, which is a bit more of an advanced technique, is when you've got Christmas stock, Tom, and you can see on the Keeper graph that last year stock went down really late and the profit margins went up massively, would you be monitoring that and telling your team to maybe hold back stock so you can make more profit, or would you rather just sell it through at a good profit? What's your strategy there?
You're the G on this.
Here we go.
I think it depends on how deep you go in for some products. If I'm going in super deep on products, I'll pay a lot more attention. If I just got 1 or 2 units, I don't really care as much. I think I will be raising my base ROI on the minimum on the repricer, but equally I will be reviewing every single listing manually, see what can be liquidated.
Right, because I had a really... Sorry, go on.
So yeah, it's a combination of those two factors for me. Like, you will have specific plays that you can make, but I don't really know if I can make what kind of plays I can do with shoes. With beauty, I know what to do, but shoes is completely new. So for me, it's going to be a case of raising my minimum on the repricer. Then the stock where I have like 20 plus units of a pair of shoe, I'll monitor them manually. Then we'll pick up on any sort of liquidations that we want to run through as well. So it will be the best time to clear out on your mistakes.
Yeah, because I had a really long chat with Luke Dugan, who, for people who don't know, is quite a big UK, well, not really big, but he's like high six figure UK seller, and he likes to try and buy, like, he'll go really deep into one product and try and buy every single product that's all over the internet in the UK, so that he can then pretty much just monopolize the market. And it was quite interesting to hear his strategies on that, but I didn't know if either of you guys tried to do the same thing. It sounded very labor intensive, because he was saying how him and one other VA would often do the purchasing, and that didn't really agree with me on an Amazon nomad lifestyle level. So I don't, even if there's a lot of profit there, right, it still means that you've got to be on your laptop whenever that stock comes back in, and you're doing the buying, which is it's not what I want to be doing all day anyway. But
I mean, if he's already got the website, he could just automate that with a bot. If that's his primary way of making Q4 work, he could just get a bot to purchase it for him, and then that would handle a lot of the legwork.
Yeah, true. I didn't even think of that.
Yeah, I think, like, also as well, like, you could just get, like, don't get me wrong, like, what's it called? Warren Buffett talks about it. It's like, rule 1 of investing, don't lose money. Rule 2, remember rule 1. And, like, get what Luke Dugan says, and I think there's an element of it, but I think, man, it's like an all-in strategy. It's like, I'm putting everything on black, and in the hope that you can buy all that stock out. And, like, like, it has...
Yeah, it would worry me so much.
And then, like, what if, like, the retailer has done so much kind of, like, creating of that stock that not only, like, you just couldn't buy enough of it. And, like, you're so all guns, all in on that product, and you'll never win. Like, you could lose so much money. Like, you could win big.
And if you've got like an IP complaint or something.
Yeah, and I think the question... Yeah. Or, like, say, for example, like, I had it. I bought coffee machines from Debenhams once, and they were out of date. And just that happened. Like, we had to return 2 pallets of coffee machines. By the way, 1 pallet had already gone into Amazon. We got it back from a customer complaint, which was hilarious. And Debenhams accepted it 2 months later, we were so lucky. It was a good, like...
That's why they're out of business.
It was like a good $8,000 worth of stock. But like, I just think, let me put it this way: I'm not looking to get rich, like super rich. I'm looking to have a nice quality of life and be able to sleep well and enjoy myself. Yeah, if I get rich in the meantime, fantastic. But I'm not like, I want to put all my eggs in one basket. And I think what's interesting is, even last year, if you looked again, like, obviously I met him the year before. He did really well. I think he did like 300,000 the year before. Last year he was going to do the million and just kind of like stopped, like, because I don't think the strategy worked. So I'm not saying it doesn't, but like, he did a big YouTube video about doing the strategy, and then like it all went quiet, and I assume it didn't work.
The market has changed drastically, though.
COVID had a big issue on stock levels in the 2 years prior. Now it's changed a bit more.
Yeah,
there will be opportunities to do it, I promise you that. Okay. But like I think he used to do Thorntons in the UK massively.
Yeah, he told me about
and the problem was
Thorntons,
he told everyone what he was doing in the next year, or what he did at the end of the year prior, and the next year he did the same thing, and everyone else got involved.
Yeah.
That's
Thorntons is a candy chocolate brand, by the way, for any Americans.
Yeah,
so probably wouldn't.
If you are a public brand,
chocolate.
If you're a public brand and you put yourself out there, if you have a very niche strategy and people find out what you're doing, your niche is now over.
Totally. That's why I like to share some of the stuff I do with books, but obviously we're never going to give away all of our secret sauce, because then it becomes tomato ketchup.
Yeah,
right.
True.
Because Amazon is incredibly competitive,
and stuff changes as well. Stuff changes all the time. Like, as you say, just the Thorntons thing there. It might not have been that everyone else copied him. It might just have been that, as you say, Tom, the market changed and it wasn't actually a possibility anymore. So it's a tough one. But
I think I started looking into Thorntons after watching his video, though. After looking into chocolates, once I got his store, I started looking into chocolates and that kind of stuff. I'm sure like almost everybody was.
And the really weird thing was, is I remember looking at the keeper graphs. A lot of them like were going to make no money at all unless you literally held on to the last 3 days. Then it went insane. Like, literally, sales were obviously through the roof.
Yeah.
And then you're probably getting like 100% ROI on your products. But your problem was like, and I especially know with Thorntons, because he talked about it, like, Thorntons had date issues. Like, you had to get certain stock sold because Thorntons had problems with their pallets, like their shipping times. Yeah. And Amazon also say that your stock has to have a certain certain amount of expiry date before it gets sold. So you're potentially opening yourself up to Amazon saying, oh, these 3 pallets, sorry, we can't accept them.
Yeah, it's a similar issue in January and August for me, because I could make $100. I could sell a book for $100, make $50 profit at maybe halfway through August, or I could hold out and make an extra $50 to $100 by the end of September. But then you don't know if you're just going to miss out on that. That last student who's going for it might not go for it, and they might just like borrow the book of someone else, right? And then you miss that sale, and then you might have to wait until January to sell it again. So I always err on the side of caution, and I would rather make that earlier profit, just because I'd rather bag that profit. It's good profit, we're still making money, and also we can potentially buy that book again rather than holding that stock. But I know other people will be more profit orientated. But it would interest me to know, for example, massive brands, what their pricing strategies are.
I don't think they are.
They're not thinking about it. They just focus on a certain profit.
Yeah, they're about volume. Volume. You know, it's
right,
like
yeah,
it's turnover, volume of stock. Like, why they have to hit a certain number of revenue and volume units. They're not hitting. They're like holding. They're not holding until you get the profit. No, not at all.
No, that proves that probably what we're doing is sensible then. And it causes me too much stress anyway. If I'm worried about whether I'm going to make that extra bit of profit, I'd rather just lock it in.
Yeah, I think if you're like a big brand, like the one thing you got to think about is like when you're an individual seller, you can hold on. That's fine. But when you've got payroll and expenses to pay, like you need to churn enough volume to pretty much guarantee money, and then extra money on top of that is great. But you've got debts to pay, you've got cash flow that needs to be generated to pay bills and to reinvest. Like when you're dealing with, like, let's say for example you're dealing with a wholesaler, you can't buy the load of stock at a great discount and then sit on it for ages. No, the wholesaler wants to build a relationship. And what does a relationship look like? Buying more stock, because they've got targets. So you have to keep these relationships going. So it's a lot more complex than you think. And if you look at generally the big brands, they're not sitting on stock, they're churning it, they're moving it. Yeah, they have dead stock, but like they're trying to move their stock at all times. It's like water, isn't it? Hold the water, it doesn't help. Keep the water flowing, then you can keep a bit for yourself each time it flows up.
Yeah, and I assume they've got lots of mathematical models that do it all for them anyway. There's not got many human. You assume so, right? If they've not got too many human people looking at I don't know.
But we assume.
I'm just guessing. Yeah.
But I'm guessing, like, obviously, that, like, if it was the other way, you'd probably see a lot of like big brands, doing, like, what's it called? Who's the big brand that went bust recently? A Pharma Pack. They'd be like holding on to their stock, wouldn't they? They're the biggest Amazon seller by volume, by a country mile. Instead, they're just volume. They were looking to double their revenue every month or every year or something, but they went bankrupt.
Cash flow issues.
And also, they just lost more money. No one cash flow, but they basically were losing money from the get-go and never lost. They were losing millions a year.
And they were still trying to double their revenue. What was their plan?
Someone mentioned, like, it's quite interesting. Like, if you look at their costings, and if you really look at their percentages of costs, like where the revenue is going to go up. If you look at what their costs were as a percentage of revenue, they predicted that their like Amazon related costs, so fulfillment costs or selling fees, would go down. It's kind of, I don't know about you, but Amazon never reduce their price. They always kind of go up.
No.
So like, and what was really interesting, at like 100 million, they weren't making money. At 150 million, they weren't making money, and they made a bigger loss. And then they were like, when we get to 1 billion, and by the way, these numbers I'm just making up. I've done a video on it. They're like, when we get to 1 billion, we're going to turn over some money now. And it was like, really? Like, for the last 5 years, you haven't made any money, and all your projections were way off. So
I think he got rich from cashback and points.
They were buying from retail. They were actually doing it away, but they were buying direct.
Was it all fueled on loans as well?
Yes, it started. It's what do you call it? Like angel investment.
Like venture cap.
Yeah, venture cap.
Yeah, got it. Okay. Well, that's a lesson learned, isn't it?
And going back to the cycling stock quick, the quicker we cycle it, the quicker we buy new stock, the more points we get and the more top cashback we get. So there's lots of other incentives to clearing stock quick. You get more money on the buy-in too.
Well, should we talk a little bit about cash? Did you say cashback can be better during Q4, Tom? Is that?
I think like basically what you got to realize is all these companies are really aware that there are people out there buying a lot for Christmas presents. So what they're trying to do is get people to buy more, to use their buying. The cashback providers will probably up their rates slightly because they want to encourage people to use, when they're spending lots of money, they want to spend through them. So you'll probably see an increase because they want people to spend it. Cashback is just a different marketing channel. I.e., like, do we go on Facebook and do Facebook ads, or do we work with a cashback provider because they have people who are a bit more cashback sensitive and they will buy through us if we give them a 5% increase in cashback rates? That works. So, yeah.
But Rakuten has been doing like 15% recently. Massive.
That is crazy.
I've seen them with 20 to 30%. No, 20% on one of the websites recently too. They have crazy amounts of cashback.
You need to make a profit on Amazon, and you could still make a little bit of money. if you just
Yeah.
bought and sold it at the same price and maybe add the prep fee on, which is ridiculous.
You could buy it, break even, and make 20%.
And then just get like spend thousands of, and then you're getting loads of points as well.
Yeah.
I mean, the great thing about OA, isn't it? It's can be a bit of a cheat code at times.
Yeah, I think
But
of it,
there's
it gives
limits
you a
to it.
very good quality of life, but it doesn't really make you that rich.
Right.
It gives you freedom.
Right, yeah.
It gives you freedom to do
It's
other
not
stuff.
retirement.
Yeah.
It's not retirement money, but it can be your cash flow, like, what's it called?
If you want retirement money,
Cash cow, that's
just
it.
yeah. If you want a retirement money, just make a fitness brand or do some fitness coaching online. That makes bank. Doing
Well, I
like
guess
what can you do?
Hence why Gavin's
See-
making his fitness OnlyFans page soon.
Yeah, sign up, guys. Like you can do fitness courses for 60-plus-year-old men who want to get fit again, who've lost their mojo. Don't take Cialis, do this instead.
I don't know. It's
The number one natural cure.
You'd have to pretend you're 60 though, because you'd have to be the before and after. So you'd have to get
No,
some sort of cosmetic.
I'll just
you'd have
put
to
like
get a mask.
I'll put doctorate next to my name or something like doctorate for then make a degree up, doctorate for 60-plus-year-old fitness. Sure, get a lot of testimonials, get videos with them.
Yeah, you can do that in America, can't you? You can just buy a doctorate, and you can be a doctor for something, really bizarre, like you said, and you're actually allowed to have that title. Crazy things you can do
In America, yeah.
But so, get back to the end of the Q4 chat. We've been going for 43 minutes. Let's do some top tips before we wrap up, I think. I don't have any, by the way.
So the person who suggested
Hoping
it
that you
has
can provide
none.
it.
Okay.
Well, because I don't do OA. Mine would just be like, I haven't got very good ones. It would just be pick up as many textbooks as possible if you're a used bookseller. But I don't really have any other juice to give, and that's not even juice. So that's like water.
Okay. Well, guys, the best time to liquidate dead stock is during Q4, but you can also liquidate it a little bit earlier if you want the cash flow. If you need the cash flow, so you could buy stock for Q4 as well. I think the worst time to liquidate dead stock is probably going to be like toward the middle of November, because then by the time you get your payout, it'll be on the 1st of December. It's impossible to get new stock in with FBA for Q4. What else is there? Always look at the keeper graph for last year's sales, but understand that it's not going to be exactly the same. Last year was different. For example, last year in UK, advent calendars, chocolate ones, what I heard was horrendous. The year before, they were really good. So what worked last year might not work this year. When people get visibility of something, everybody hops onto it, and then it no longer works.
When all the gurus are telling you to do something, don't do it, because everyone's listening to it. Yeah, I think for me, it's come back to Gavin, keep a chart. Not only do what Gavin's saying, but also go to the whole year and look at January sales last year as well, this year as well, because you need to know if you need to sell this product through. Obviously advent calendars you can probably understand, but it's a really good idea to understand if those items should be sold in Q4 or will they continue to sell in Q1. That's a really important point. I think also as well, if you're watching this right now, go get more money. I promise you, credit cards, credit cards, loans or something. Obviously, so long as you feel comfortable, it's not financial advice, but when you need the money, it's really hard to get hold of. When you find those deals and you want the money, you just can't buy enough of them. That's the big thing. It's a great opportunity in Q4.
Yeah, I guess that transfers over to August and January for a bookseller. You think, oh no, surely that book's not going to sell that many copies. Surely only buying 20 of these will be enough. And you go through those 20 within a few days and you realise, damn, I should have at least bought 3 times as many as that. So for anyone going through their first Q4 or first textbook season in January, go a bit deeper if you can. Even if you feel like you're pushing the boat out a little bit, I'd say take on a little bit more risk, because when you look at that keeper chart and you see that duck in the green sales chart line, that means business. And you can look at the offer counts as well and see roughly how many sales were made, so you can be a bit more methodical about it.
But here's the thing as well though, Seth. So let's say the BSI line does not go down. Even if it stays where it normally is, it's still going to sell a lot more because of the seasonality effect.
But surely that would mean the BSI line would go down, wouldn't it?
No, because everything sells more. Everything sells more.
Oh, sorry, I get you. Yeah. That's a great tip. I didn't even think of that. So cheers, Gav.
You're welcome. Beers on you.
I'll be taking that on. Sonora's on me.
When are you coming? We'll get your flight here, Seth. We'll pay for your flight.
Yeah.
I've got some fair points.
Oh, all right.
Yeah.
Economy.
I've got a few points saved. But unless you guys have got anything else you want to talk about, I think that's a good way of wrapping up episode 5 of the Something Nomad.
Amazon Nomads.
podcast.
We've agreed that Gavin's
Amazon Nomads.
giving up his YouTube name.
Yeah.
Oh, you're just going to be Sweeney Button. Cool. No worries.
I'll be
Very
no,
SEO
I'm
optimized.
Amazon Lifestyle.
Amazon
Lifestyle.
Alright, cool.
All right then, guys.
There you go. Well,
Thank you very much for tuning in. Don't forget to like and subscribe below. Any questions, any comments, let us know. Any topics you want us to cover, also let us know. Thanks and peace out.
Bye.
cheers, everyone. Bye bye.